The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, CoBank has released their 2024 year ahead report, and we want to take a dive into that report and look at some of the factors that could shape our rural economy and the ag economy as we move into 2024. What are some of the outlooks here in the grain and oilseed market specifically? Joining us for that conversation, he is the lead economist for grains and oilseeds with CoBank. Tanner Ehmke is with us here on the show today. Tanner, always good to talk with you and have a conversation. I hope you're doing well. Merry Christmas and Happy New Year to you. Thanks for joining us.
Absolutely. Good to have me, or thanks for having me back, Jesse.
Well, thank you for the time. And let's dive in first, kind of headline here, looking at this 2024 year ahead report. Just set this up for us a little bit, Tanner. What was the big thing that CoBank found in terms of looking ahead at the rural economy and the ag economy as we move into next year? What's the big headline that came from this report?
Well, as you know, Jesse, we live in a world of risk that seems to only continue escalating, and that's slowing down the world economy. And it doesn't matter what market you're in, what commodity you're in. This slowing global economy is going to be affecting the outlook. And our anticipation is that that's going to be causing some pressure on commodity prices in general. That being said, we've got the expectation of the Federal Reserve to be cutting rates at some point next year. Now, that's way up in the air. Obviously, there's a lot of things we can talk about in regard just to the Federal Reserve and their response to inflation slowing down. But the outlook here is that we're going to have to go with what the market is anticipating, which is some measure of interest rate cuts next year. What does that mean for agriculture? What does that mean for commodity prices in general? That's a positive, because as interest rates come down, that's a loosening of the monetary policy, easing of the money supply, and that puts a stronger floor under commodity prices because the value of the dollar is going to come down. And that's the trend that we're seeing right now in the value of the dollar as we head into 2024. So the trend there, I anticipate, is to continue if the Federal Reserve follows through on this plan, in addition to a slowing global economy. So what that means then is, broadly speaking, that puts a stronger floor under commodity prices, because we would see stronger export demand for our commodities.
Well, throwing that stronger floor under commodity prices, I think, is something that a lot of producers want to hear, because right now, we're at the end of 2023. We're looking to next year. A lot of producers are making decisions about their inputs for next year. And I know something as well you guys found in this report. We got a lot of high costs out there that, even if we start to cut interest rates, Tanner, there's a lot of farmers that are making key decisions the next, month or so ahead, and they're looking at possibly planting their most expensive crop ever. So talk about that a little bit.
Yeah, it's always hard to talk about cost of production, because costs never seem to go down. But we do have a couple of things here to celebrate, Jesse, and that is our costs of your big inputs like fuel and fertilizer are down compared to last year. Interest expense is expected to come down if the Federal Reserve lowers their rates. So there's the positives there. Now everything else that we follow, you've got labor costs continually going up, because we're continually tight on labor in this country, and that only seems to be getting worse. We have rising expenses for other raw materials. As we head into 2024, we're seeing steel, copper, and lumber prices kind of recover. in a response to this expectation that the Federal Reserve would cut interest rates, thereby making construction a little bit more viable. And so therefore, we're already seeing those raw materials being bid up, and that's going to cost the farmer some more on the farm if they're wanting to do any CapEx projects like building a grain bin or a warehouse, anything like that. Machinery prices also remain fairly high. Land prices don't seem to be budging either. So when you look at those key costs, especially land and machinery, there's no sign that those are coming down. And it doesn't look like 2024 would be the year where we would see those really drop down. It would be perhaps in the years 2025 or 2026, where we see perhaps those expenses like land and cash rents and machinery kind of start to soften. But on the big picture, yes, you're right. It is going to be a very expensive crop. Hopefully, we can continue to see a weakening of fertilizer and fuel prices to take some of the edge off.
That's a good point, and hopefully that is the case. And in general, with the U.S. economy, you've alluded to the Fed and the rate cuts, and just looking at inflation in general and where things stand. And I know too, of course, a lot of folks are having conversations with their ag banker right now. I think another good caveat, though, for us, Tanner, we talked about this before. Farmers are coming off a few years of very good profitability, so hopefully they have a little bit of cash reserves. But I know some of those conversations here moving into 2024 with ag bankers could be a tough conversation. I guess maybe your thoughts on that. Talk about that. I don't know how much of that was necessarily wrapped up in CoBank's report looking to next year, but what's your thoughts there? Can you maybe share some thoughts on that aspect of it as we move into next year?
For sure, there's going to be a little bit of stress out there with commodity prices having come down and expenses remaining fairly static. I will point out, you noted earlier, Jesse, that we had some really phenomenal incomes on the farm over the last couple of years. And our customers have some interesting anecdotes of what that has meant for them, for the co-ops I'm talking about. A lot of the co-ops of our customers are telling us that farmers have asked to defer income not only into 2024, which is not uncommon, deferring it into the next year, but into 2025, and in some rare instances, even into 2026. Okay, farmers are carrying over a fair amount of cash, and they defer that income to reduce their tax expense. So I would just preface it saying that, yeah, we're going to see a compression of margins, but we're carrying over a fair amount of cash from the last couple of years, which have been very healthy. So I think that although we are going to hear some stories out there of financial stress on the farm, and that's not to be minimized by any regard, we do have to keep in mind that the farmer is coming in with a fair amount of cash, and a lot of farmers are trying to spread that cash out over the future years to reduce their tax liability.
What about the global economic picture? I know you guys looked at that in your 2024 year ahead report as well, and I think we can kind of bookend the U.S. economy. I hear a lot of headlines about China's economy is in bad shape, and oh no, and kind of doom and gloom there, but yet I don't necessarily see that affecting the U.S. economy as much as one would think. Your thoughts just on China and or that global economic outlook as we move into next year, Tanner?
Well, China is one of our biggest trading partners in agriculture, and one of our biggest trading partner for the United States. And so our economies are tied together. Now, we can hate each other as much as we want, but at the end of the day, the United States benefits from a healthy Chinese economy. We need them growing so we can sell them more of our products. China clearly has a lot of headwinds that have been talked about a lot over the past year that are not going away. They have a declining population. They got their demographic issues of a very high youth unemployment rate. They've got a lot of elderly that are retiring and not enough workers to replace them. They've got a very toxic debt situation, especially in regards to their real estate sector. They've got the business community scared with all of the talk coming, all the regulations coming from their government. And then there's the fear about something that could happen between the United States and China, militarily speaking. over Taiwan or China's support of some of our adversaries like Russia. So we have some concerns there that are causing headwinds for their economy that are not to be discounted at all. They're all fairly big. Every individual one of those headwinds that I itemized there, Jesse, are all fairly large concerns. And so there's some big concerns over the Chinese economy next year. They could, again, slip into a period of deflation, and that would not be good for the Chinese economy because then they would spiral out of control, potentially, if they don't have the capacity to dig themselves out. So we need a healthy China. It's just that this is the China today is not the China it was several years ago. And so that growth outlook is quite a bit lower than it was in prior years. And so our exports ultimately are going to be affected by that.
We are having a conversation today with Tanner Ehmke, lead economist for grains and oilseeds with CoBank. We're going over the 2024 year ahead report from CoBank. You can find that on their website, cobank.com, under the knowledge exchange section. Tanner, as we continue here, I noticed as I was looking at the report, I want to segue a little more into just the grain and oilseed markets and the fundamentals here. As you looked at the U.S. ag economy and looked at grain specifically, you guys had a headline in there looking about renewable diesel. And of course, we've heard a lot about renewable diesel and these crush plants being built here in the U.S. and the talk that could shift some acreage to soybeans in 2024. What are your thoughts with where that market sits currently? Could 2024 be the year where we really see this explosion for renewable diesel? What's your thoughts?
The last couple of years have been very positive for renewable diesel and increased crush capacity in the United States. That theme is going to continue into next year. We have a lot of borrowers that are expanding their operations, their crush facilities specifically, new greenfield plants coming online. And so in certain areas, what that's going to do is tighten up the local demand or tighten the supply rather as demand increases. And that's going to put a stronger local cash bid in the country where you're going to see that tightness. And what that ultimately is going to do is that's going to pull a few more acres into soybeans. Now, it's hard to say this is going to be a permanent move by any means. Markets are always fluid for all kinds of reasons. And what I'm referring to there specifically, Jesse, is that we are having record imports of vegetable oils into the United States, specifically canola, because of rising demand from renewable diesel. And what that does, therefore, is that takes away some of that bullish case for soybeans increasing their acreage. At the same time, Brazil last year had a record soybean crop, so we lost some of our exports because more of our soybeans went to domestic crush, and the Brazilians picked up more of the export market from us. Now, that being said, we've got a concerning situation in Brazil with their crop, especially in the north. It's still very dry. They've gotten some rains in some areas, but we're going into deep into the growing season in Brazil in a very concerning situation. And that may, if they don't get a relief from the heat and the drought down in Brazil, what that ultimately is going to do then, Jesse, is that's going to incentivize still more, soybean acres over the U.S. as more export demand comes back our way. And where are those acres going to come from? Some acres will come from corn, some will come from wheat, some will come from a whole bunch of other crops, be it rice, sunflowers, anything else out there that is in that range of where soybeans are grown. Soybeans are going to pick a few more acres up where they can. But we'll see what happens in Brazil. But on the note, as you mentioned earlier, with renewable diesel, absolutely, that's a continual driver, and we're going to see that happen for at least for the next 3 years.
I think another thing we could tie in with renewable diesel here as well is sustainable aviation fuel. We've seen some headlines here just in the last couple of weeks. The Treasury Department says they're going to use the GREET model to determine tax credits, et cetera, for SAF. And, SAF's looking like another opportunity to be, with ethanol kind of hitting, I don't want to say ethanol hitting its cap, but, ethanol's kind of at where it's at its point, sustainable aviation fuel for, corn, or even if it's bio-based, whatever the case may be, looks to be another avenue, another opportunity here. Is that something that you're watching as well here that could impact the grain and oilseed markets in 2024, Tanner?
Yeah, Jesse, and I appreciate you bringing that up. That's an important issue. Ethanol producers have had very strong margins, although those margins are coming down with the drop in fuel prices, and that's going to be weighing on ethanol prices. But we've had a very strong run here this year. We anticipate that to continue, although it'll be a lower margin net year for the ethanol producers next year. It's still going to be fairly healthy. Because we still have a record corn crop that they're benefiting from, and they're going to be increasing the amount of corn that they use for ethanol production. So I think the thesis is still there for corn usage for ethanol to remain fairly robust in 2024. And now you got some of these other factors that just add, like SAF, that have just an even stronger thesis for using ethanol going forward. So again, that's going to be tempering the shift of acres out of corn over to soybeans when you've got both the thesis on both biofuels, ethanol and renewable diesel, being very strong. And so really, I think the shift in acres next year is going to be really coming out a lot of crops, other crops, and wheat, I think, is probably going to be perhaps the big loser there.
And that's a good point you raised, because I think about the shift in acres. It's no secret. I think we know this, Tanner. A lot of farmers, especially Iowa, Illinois, Indiana, Minnesota, they like to grow corn. I mean, year in and year out, corn is king, and they like to, put corn in the ground versus doing anything else. And so I think that's stands to wonder. And two, coupled with that, he brought up South America and Brazil. If South America does have, weather problems and that safrinha crop is delayed, I wonder if that could lead to some late changes in thought process here for what U.S. farmers put in the ground in the spring. I just, I think about this, and I agree with you. I think if acres are going to get shifted, wheat could be a big loser, or some other crops, because at the end of the day, I think U.S. farmers, they love to play at corn and soybeans. And beyond that, things are kind of up for debate sometimes, isn't it, Tanner?
Yeah, corn and beans is a rotation that wins agronomically and economically. Farmers don't want to abandon that rotation. You don't want to get soybeans to nematode in the soil. You don't want to get corn earworm, all those issues. So on the margin, there might be some trading of acres between corn and beans. But as we've seen for decades now, a lot of the shift always comes out of the small grains like wheat.
Well, and thinking of that wheat market too, that's been an interesting picture globally here. Thoughts in wheat before we wrap it up here today too. A couple other things. I mean, we've seen China in buying U.S. wheat here towards the end of the year. We know Russia's had a big crop. They've been dumping a lot of wheat on the world market. When you look at the 2024 outlook for wheat, beyond maybe some acreage moves in the U.S., what's your overall thought in just this global wheat picture right now, Tanner?
Well, the story is all about the Russians. It's Russia, Russia, Russia. I mean, and that is really the story here. Although Russian exports have started to slow down a little bit and they've seen a depletion of their stocks, they're still fairly ample. And so that continues to weigh on the market. You mentioned China. China had a bad crop this year because they had some rain during harvest. And so they have been now importing a fair amount from the United States, because soft red winter wheat traded in Chicago was a fairly big crop this year for the U.S. And for a period of time there, we had the cheapest wheat. We had cheapest in the world. And so the Chinese were taking advantage of that. I think going forward, we still have to keep our eye on Russia. And now the market is starting to trade next year's crop. And it looks like Russia has got a very healthy crop right now that's in dormancy. And so the concern here is that it's just going to be another record crop or near record crop in Russia next year when that crop comes on, when that crop is harvested in June, July, that time frame, August. And so I think the market is struggling with that. Now, around the world, we're still fairly tight on wheat, but the Russians just continue to dominate the story, and we're already looking into next year, perhaps in yet another record crop.
Well, Tanner, great thoughts. Before we let you go, anything final you'd want to share or reiterate about the 2024 year ahead report from CoBank, or anything else in general in these grain markets that you'd want to mention before we wrap it up today?
I'd say the outlook, from the way I look at it, is generally a positive on so many things. Our cost of inputs are down, fuel and fertilizer are down. Interest expense is going to be coming down next year, and with a cheaper dollar, conceivably putting a stronger floor under prices, I think that next year is not going to be as bad, perhaps, as some are forecasting.
Well, good thoughts. You can read the full 2024 year ahead report from CoBank online, cobank.com, under their Knowledge Exchange tab. With that, Tanner Ehmke, lead economist for grains and oilseeds with CoBank. Always good to talk with you, Tanner. Merry Christmas, Happy New Year. Thanks for joining us. We'll talk to you again soon.
Thanks, Jesse.